very interesting times here. I think we're in unprecedented times here. They say sometimes you don't know you're living through history until after the fact. And I think we're in that time right now as we speak. If this thing drags on till September, you will see $200 oil. You will see absolute demand destruction as maximum as possible. You will see planes grounded. You will see a complete shift in people's energy consumption. It's, how long do we have? Maybe 30, 60 days, somewhere in there, of still like relative calm in the grand scheme of things. And after that, you will get to absolute chaos. I don't want to say you got to go in your bunker and collect 50 years worth of food, but just be careful. Be understanding of the situation that's currently there. It would take one Houthi rocket to blow up the Yanbu port, and there's 4 million more barrels per day offline out of Saudi Arabia. People should come back a bit to their, if I will, the hunter-gatherer mindset, where you need to be on the lookout for dangers that can come in. Because I'll be honest, I don't think the global powers that be have a control of the situation as they've been claiming to for the last many years.
You're watching CapitalCosm. My name is Danny. It is March 25th, 2026, and my guest today is Shubham Garg. He's the CEO of White Tundra Investments and Prospera Energy. Shubham, thank you so much for coming on, my friend. You're one of the big oil experts that I rely on for my news, so we're super stoked to have you on. Provide us an update. Provide us a key update in terms of what's going on in the oil markets. Will it go higher? And so much more. Shubham, thank you so much for coming on.
Yeah, thanks for having me, Danny. It's good to be back, and definitely some interesting times in oil markets here after about a 2-year lull there. So looking forward to chatting here.
Yeah, you and I were chatting offline, and you were telling me how this was all part of a cycle, how this recent oil rise was part of a bigger cycle. But to the layman, it seems like it's been a consequence mainly of the Iran war and the Strait of Hormuz crisis. Can you expand on that, on why you think this is all part of a grander cycle at play here?
Yeah, you bet. I think it goes right to the core of the structural bull oil market, as we've been talking about for about 4 to 5 years now. Really, it comes down to supply demand. Those are the two factors that matter. Over the past 10 years, we've had demand rise consistently about that 1%, 1.5% a year, equates to 1 to 1.2, 1.3 million barrels per day of demand growth. And in the meantime, you've had OPEC plus producing at relatively their max capacity. They have held some barrels back after COVID. And in the meantime, US shale has been responsible for about 110% of that demand growth. So they have really come to the table. They've added barrels very quickly. We're talking about the US shale unconventional oil, which can go drill, frack, get the well online, huge rates, but then huge decline rates. So, the basis of the oil markets have been set on conventional oil, very, very long lead projects, but then they produce at peak rate for many, many years. And the unconventional patch completely different. So almost a Band-Aid solution, you can say. A lot of capital required to keep that production flat. At the same time, you have limited inventory. And that really became more and more obvious in 2021, 2022. The world sort of said, whatever, it doesn't matter. We have US shale at all times to kind of come to the forte. And then we just sort of kept turning through inventory. 2023, demand kept going up. The oil price was pushed down through SPR sales, Strategic Petroleum Reserve of the US, through the drilled uncompleted inventory being brought down. Then we had 2024, more inventory gets depleted. We have demand continuing to rise. 2025, demand continues to rise. And we start to see the cracks in US shale. So production no longer rising at all. In fact, towards the end of 2025 was starting to drop. We also had all the OPEC plus barrels that got added, over 2 million barrels per day, effectively absorbed by the market. At the same time, seeing record demand growth in sort of all aspects of every oil product going forward. And meanwhile, the world is running on no insurance policy. We had drained our inventories. We had not really stop demand because we're bringing prices down in 2024, 2025, which creates additional demand. The rest of the world with huge populations was entering the S curve. So people going from motorcycles to personal vehicles, a huge increase in the petroleum consumption. People going from burning fire to having some sort of propane tank. Huge increase in petroleum consumption, and it just kept rising. So we started to see this disconnect, and really we're getting set up for a nice little bull cycle here, with the idea being, okay, if there's any global problem, if there's any global conflict, if you have a major outage at, let's say, a big part of US shale to winter, or the Canadian oil sands, or whatever it may be, the world didn't have that lever to pull and say, bam, here's the barrels. Now we're good to go for a few months. So you can kind of see that starting to materialize here. Panic, a bit of a uncontrolled runaway situation that can occur if this crisis currently is not brought under control in a very short time frame. We're losing upwards of 400 million barrels a month at this rate, which is the entire IEA G7 SPR release they're talking about. So we're really setting up here for what we can call that long-term bull cycle. Even as this crisis may come back to normalization, we're set up here for just continued demand rocketing up, no pun intended, and supply at the same time really being affected with no easy supply adds here over the next few years. So really setting up strongly here. The oil producers don't want this up and down fashion. We want a sustained sort of growth here in the price of oil that brings more investment into the market that then normalizes down the road.
And the Strait of Hormuz is obviously not making things any better. It's obviously having an impact. You were anticipating a cycle, a bull cycle at play here, but now that you've got like this crisis on top of it, it's just acting as an accelerant. What's the overall impact here? How does this kind of impact your overall thesis, your pre-existing thesis of the bull cycle that was coming down the line?
Yeah, 100%. So there's two impacts in my mind. There is your near-term impact, one that we live in day to day right now, 10, 11 million barrels per day of oil stuck and or lost. And then, of course, the ramp-up phase of that. Okay, even if the crisis ends, how long does it take for us to get to that full barrels per day production that OPEC Plus was doing? Saudi Arabia, Kuwait, Iraq, more importantly, some of the bigger barrels that have been lost. That also at the same time drains global inventories as we go. So we talk about, okay, you got supply, you have demand, and inventories is your buffer. It is at the end your sort of kitchen cabinet. How much extra food do you have left in there before you run out? People usually keep extra items that they use on a day-to-day basis, the same way the world keeps oil stocked in its inventories. Now, those inventories have been depleted over a period of time. We came into this crisis, Strait of Hormuz crisis, in a slight oversupply, you can say. That is more or less gone because it will take time for us to get those barrels back. Demand at the same time, yeah, there's a bit of demand destruction. How much really? I remind viewers, when we had COVID, everything in the world was shut down. We still only lost about 20 million barrels per day of demand. So it's not reasonable to think, oh, the world can suddenly cut back on 10% of global demand and just stay there forever. It's absolutely not going to happen. People will cut and then adapt to use petroleum consumption again. Traditionally, human nature operates that way. We're seeing percentage of consumer expenditures on energy being at record lows right now. So there is room to give there on the consumer in terms of spending more on gasoline, diesel products as need be. And sort of that's your near-term issue. As we come out of this, you will expect to see that we are at lower inventories, lower supply, depending on how long that undersupply lasts, how fast demand can ramp up even higher, how many barrels keep getting pulled. That naturally leads to higher pricing, sort of accelerant, as the word you used, on this oil bull market. The markets don't like to be in undersupplied for too long. and unless there's a clear supply coming online, whether it's U.S. shale, likely not going to happen. Whether it's other offshore platforms, yeah, here and there, or the normalization of OPEC plus barrels, which will take longer. Don't forget Ukraine still attacking Russian oil ports, oil pipeline, oil infrastructure. At the same time, taking advantage of this current sort of chaos situation that's occurred. So that's point number one. The point number two, I would say, is a global regime change. Again, no pun intended. What we're going to see is countries like South Korea, Thailand, Philippines, Australia, even some of the European countries say, "Oh, this is really bizarre. Within 7 to 10 to 15 days, our entire economy is being held at gunpoint here by forces completely out of our control, and there is no clear solution in sight beyond job owning, a bunch of confusion and sort of uncertainty, unknown. The last thing politicians need is uncertainty and chaos in their population. The last thing they need is the population asking, are you really in control, or are you just following the global, other powers to be here on what's happening? So what I expect to see is, whether it's physical barrels or further deals, we expect to see that there will be a pull on global supply, not just from demand, but from inventory refilling, from gas stations building an extra tank on the side, from truck companies building an extra diesel tank on the side, from countries themselves building bigger SPRs, consumers themselves maybe keeping 10 liters, 20 liters of gasoline in their garage. Not saying everything's going to collapse all of a sudden, but people are generally very rational. They like to protect themselves. They like to protect their family. And these are small price to pay to keep some excess insurance policy in place. And that you will see sort of as a norm going forward. It will add to the global inventory, which holds on supply, therefore keeping prices elevated for a bit longer period of time would be the expectation. So I think we expect to see, we had a destocking phase after interest rates rose in 2022 because people didn't want to carry inventory. It costs money to carry inventory in a high interest rate environment. We are now going to see that restocking happen. And it could happen not just in oil, but also in food, in fertilizers, in steel, in copper, sort of across the board, restocking of products, because the world has been just sleepwalking into, if I need something, Amazon will be here and I can just call Amazon and they can deliver whatever I need. I can call Uber Eats at any time. They can deliver what I need. That's totally fine. But maybe a bit of a warning signal here that the world should not be so complacent, because when these issues occur, they occur unexpectedly and they go on for a lot bigger and a lot longer than people usually expect. At the end of the day, let's not forget the fact the Russia-Ukraine situation is still occurring. There's still drones flying around, and it just sort of got taken for granted. Which is not how the world should run in a properly operating economy.
Shubham, you brought up South Asia and Southeast Asia, as well as Europe facing the crisis early on. Even Australia, I'm seeing all these clips of people not finding gasoline at the pump, and cases of people siphoning off gasoline from people's cars. Like, it's getting pretty gnarly out there. Will this affect North America as bad as the more reliant regions of the world? Because you and I here in North America, you well know that we're relatively more self-sufficient in our oil and gas than other parts in the world. Will we start to see similar things that we're seeing now in Asia, in North America?
Yeah, great question. I think we're still early days. We're not there yet. Most of these countries you referenced have relatively higher oil import going on. They also need some of their refined products to come in if they don't have the right kind of refining slate in order to really take advantage of refining the oil that comes in, and just have always been this way. They have always been reliant on other countries to come in, the global peace, if you will, to go on. North America definitely more insulated. We generally carry more oil inventories. We generally carry more product inventories. The U.S. crude export ban that was brought up, not the greatest idea, but the U.S. product export ban may actually still be generally a good idea here, to keep some more gasoline, diesel, propanes, and whatnot within the local market. Canada generally undersupplied in terms of refining capacity. So yes, we have way more oil than we consume, but generally undersupplied on refining capacity. So still reliant a little bit on the US there, especially on the East Coast, to bring products back. Generally, you're right, more insulated. I think the price still hurts though, right? Whether it's not shortages, people still paying 40% more, and it's the first thing people see. Like, I am constantly shocked at the amount of people that this can be like the oil guy yelling at cloud type of thing going on here. But I'm shocked at the amount of people that, okay, I'll pay an extra 50 cents to add this kind of milk in my coffee. Yeah, but that extra 50 cents per gallon kills them when that gallon can drive them 40 miles. Like, that's crazy. You can go 40 miles, so completely across towns, in this 4,000-pound machine. That's absolute convenience, and all of a sudden the world's ending. So I think the world has to adapt here. North America in general, the biggest consumers on the planet and the biggest wastage of petroleum and products in the planet, I think going to have to adapt here. So, and that doesn't necessarily mean lower consumption. That just means that we're going to have to find a way to absorb this higher price. The cheap US shale has lulled people into the sense of abundance, which is great. We're not in a scarcity fashion right now, but at the same time, we will have to make sacrifices in other parts of the CPI, if you will, on the shelter piece, on the transportation maybe piece, on the clothing, the food, etc., and just fuel what matters, which is gasoline and diesel run the global economy. So I'm kind of curious here to see what kind of patterns emerge. We were ultra bullish on this in 2022 on sort of the patterns changing. They didn't really change because we had spare capacity at the time. We had US SPR, we had US drilled uncompleted wells, we had lots of private equity backed shale companies that were able to increase production and then sort of massage this situation. This time we have real supply loss, maybe 50x what happened during that crisis. So I think this is good for the world. I think we're going to see energy education rise. I think we're going to see better energy policy. I think you're going to see better knowledge of energy policy from the consumer. I think you're going to see more investment come into the smaller scale junior oil companies, which drive innovation, which drive that entrepreneurial spirit. You're going to see a bit of a reset here. At least I hope that's the way, because the world really needs it. We cannot sit here just la, everything is fine, and then bam, there's a major crisis, and global powers like Australia and Europe and South Korea are getting smashed in less than a month. It's really eye-opening, and again, at least it should be, as to what kind of insurance policies the world needs, what kind of extra inventories does the world need, and sort of where we need to be. So I think North America insulated, but we shouldn't take this for granted. I think consumers need to be aware. I think politicians need to be aware. I think decision makers need to be aware of what's happening, and I think people generally will adapt to sort of account for this higher pricing as we go. The one comment I will make here is, one of the things I was watching, what was the U.S. rig count, and it has not risen at all. Not in the Bakken, not in the Permian, not in the Eagle Ford. The Canadian rig count is down because of the spring breakup that happens usually this time of year. And there just isn't the kinds of private equity-backed companies left with decent quality acreage even, that can just go ramp up tomorrow, because they don't care. All they're chasing is barrels. You've got the strong holders here holding barrels, and those companies like Exxon, Conoco, EOG, Diamondback are saying, you know what, the gain on us adding rigs is actually not that much. Like if we add rigs and we grow production 3%, 5%, it doesn't matter compared to the increase in barrels that we're getting, or sorry, the increase in pricing that we're getting on the current barrels we already have, right? They're seeing revenues go from $62 a barrel to $85, $90 a barrel. That chunk is way bigger than the amount of barrels they can add and blow through inventories. So yeah, just a different mindset. Should be exciting to see what happens as this crisis drags on. Should be exciting to see what happens as slash if the crisis ends. I think it's anybody's guess right now what happens. But what I can say is that the world is not just going to go back to where it was on February 28th, 2026, believing that there's infinite oil out there. US shale will always come. I'm okay trusting the government to hold enough stocks for me, and enough oil inventory for me. I think that whole thesis getting chipped away right now as we speak.
You've had estimates claimed by Iran that they're targeting $200 a barrel oil into the future. Do you see that as feasible if they maintain the closure of the strait?
Yeah, I mean, anything can happen right now. I think it's still, people are too chilled out, too relaxed, and I will be the first one to say oil bulls have naturally gotten thinned out. Oil bulls have naturally gotten smashed. But that doesn't change the fact that we made huge money during these spikes. So yeah, even if you retraced 40% from the high, you still make 10x on the way up, because the cash flows of these companies rise so rapidly, right, between $60 oil and $80 oil and $100 oil. Kind of something that gets mistaken in all of this is it's not about being wrong at the top. It's about being part of the journey as you get from that bottom to somewhere near the top. That's the important piece. So I think, generally, oil bulls, whether you're a commodity trader, whether you're a E&P holder, generally will be pleased with the situation, if you will, in terms of where the cycle is going. The longer that this drags on, the more that inventories drop, the longer it will take for the world to recover from that. Want to make that point very clear, is we are physically losing 8 figures of oil barrels per day. And the longer that goes on, the longer it takes for us to get that back. Like you would need 10 days of an oil oversupply of 1 million barrels per day to gain 1 day back right now of the war dragging on. So I think, $200, $300, whether that's a paper price, whether that's the physical price at certain place in the world, whether it's certain kinds of jet fuel product, which is already trading at $200 a barrel today, depending on scarcity, where that product is, what people are willing to pay for it. I think, more or less is anybody's guess. What matters really is what is the actual supply loss, and where do we end up in the new cycle? Do we end up being above $80 oil per barrel of oil for the next 2 years? Do we end up above $100 a barrel for the next 2 years? That to me is more important for an investor, or oil traders, whoever, than the one-time spike that goes to some number and then comes back down, because that's all just for shock, right? Just like the negative 37 that happened, it's the same thing. It is basically a meaningless number. You could have dropped it to minus 500. You can up it to plus 500 today. I think gets more people excited about oil investments, which may be the other interesting piece, because all the news companies can go and put out fluff pieces to get eyeballs. I just think in general, we're losing 11 million barrels per day. This has never happened before. And every single day, we're losing 11 million barrels per day. Even if we have a ceasefire, which naturally shows we're moving towards potentially a de-escalation, you're still losing 11 million barrels per day. So the question really to me is how many barrels do we actually lose? What's that area under the curve as we normalize over the next few months or over the next X amount of time? And that to me is what really matters. Just as an example, we as an oil producer get paid based on the monthly average of the month where we ship that oil. So if it spikes to 200 for one day and it comes back to 140 or goes to 200 for a week, it's not really all that relevant to the oil producers. But if I can get over $100 per barrel of oil for the next 2 years, I'll take that all day long versus a $500 spike for a week, if you will. So, should be very, very interesting times here. I think we're in unprecedented times here. They say sometimes you don't know you're living through history until after the fact. And I think we're in that time right now as we speak.
You've even had projections from the military saying that this could drag on to as far out as September or even longer. What happens if things don't change or get worse from now until September? That's like, what, 6 months away? A little under 6 months away? Where would we be by then, in your view?
Yeah, there is no way this thing drags on until September. There is not enough oil inventory in the world, and there is not enough give up of ego, if you will. Here, you got two absolutely majorly egotistical parties here on the table. Really, at the end of the day, you could say three major parties between the ones that are involved in sort of starting this war. Nobody's going to back down. I don't think it's going to be an easy negotiation. Again, I don't want to make claims that it can't, but if this thing drags on till September, you will see $200 oil. You will see absolute demand destruction as maximum as possible. You will see planes grounded. You will see a complete shift in people's energy consumption. It's still not going to be 11 million barrels per day of reduction of demand. You will still see inventories continue to go down, and you will see people getting way more upset than they naturally do. In normal times, if you will. So I think there has to be a solution before then. One party is going to have to give up something if they're going to do the structured negotiations, or one party is going to get absolutely blown up, one way or another. So I think time is ticking. We're still early stage. Every day there's more ships going into the Gulf, into the Arabian Sea area, into the Indian Ocean. Every day there's more news coming out about more closures on the supply side of things. US shale cannot ramp up 11 million barrels per day. It can't even ramp up 1 million barrels per day by September. I'd be surprised if it goes up at all between now and then, given the usual rig frac delay and just given the complete lack of interest from what it seems like so far on people wanting to do that. And it's gonna be crazy times, man. Like I lived in Kuwait for 9 years. I seen the kind of different, I was very young back then, but I've seen the kind of different environments there. It's huge areas. It's a lot of people. You don't know who's part of the IRGC. I'm talking Iran now. They're regular people in society. I lived in San Diego, where we had the USS 68 and the 72 aircraft carriers parked right there. I've seen the planes flying nonstop. Both countries are willing to, it seems like, go at it here. And even if there's negotiations, 11 million barrels per day is still shut, which could go higher. The Houthi rebels are still in the Red Sea, thinking about what they're going to do off the port of Yanbu, where Saudi Arabia is being able to ship barrels right at the moment. We're sort of teetering on edge right now as to where things are going to go. And I think September is going to be absolutely disastrous for the global economy. You are going to see a complete disaster if that happens. Yeah, you'll see oil price a lot higher, but generally not good for anything really. Humanity wise at the end of the day. So we as consumers are absolutely addicted to oil. It is the biggest drug by a factor of 5,000 ever invented, and people consume every day. People consume day and night, 24/7. Oil, diesel, gasoline, jet fuel, propane, natural gas, coal. Um, you know, the energy consumption is very difficult to stop once that demand gets there. So I think there has to be either a negotiated solution that allows supply to come back, 2, 3, 4 months down the road, or there will be an all-out global sort of takeover of what needs to get done here. How long do we have? Maybe 30, 60 days, somewhere in there, of still like relative calm in the grand scheme of things. And after that, you will get to absolute chaos where irrational decisions being made to get the Strait open, irrational decisions going to be made to get all the warriors and everything wiped off the west coast of Iran that are throwing bombs and stuff. Time is taken every day. Every hour we lose 500,000 barrels of oil inventory is sort of what the current situation is. We were complaining about a 500,000 barrel per day oversupply just 6 months ago. Oversupply 500,000 per day. Now we're losing 500,000 barrels per hour. It is a complete unprecedented times. I cannot say that enough.
Hey guys, quick pause from the podcast, but this is something I feel is really important to let you in on. Back in 2020, before I even started this channel, I was looking for an edge, a way to find the big opportunities most investors never even hear about. That's when I found Capitalist Exploits Insider. From day one, it felt like I suddenly had my own team of world-class market pros working for me, digging up trades all over the world, doing the deep research, and handing me ideas that had massive asymmetric upside. Stuff that I would never even think about. Since then, my gains with them have blown past the S&P and the NASDAQ, and it's honestly the single best newsletter I've ever subscribed to. And that's not me blowing smoke. That's for real. I've interviewed their publisher, Chris McIntosh, more times than I can count. In fact, my latest conversation with him is linked in the description box down below if you want to check that out, as well as a pinned comment. And every time, I'm reminded why I've stayed a member for years. Right now, they're offering a special $1,000 discount on the Insider subscription, but it's only for CapitalCosm viewers, so you're only going to get it by clicking the link down below in the description box or the pinned comment. You're not going to find this anywhere else. Click the link, lock it in, and start getting the same game-changing research I've been using since 2020.
How much longer can they kick the can down the road with SPR releases on the part of the G7 countries, including the United States?
I think it's the same number. 30 to 60 days is what we have with the SPR release. All these SPR have maximum release rates. You can't just release 10 million barrels per day out of the US SPR. It's physically not possible. There isn't enough loading capacity for oil exports to make it happen either. You're talking about million barrels per day there. Maybe another million and a half barrels per day globally can be put out into the market. So I think the clock's ticking as we speak. And I'm kind of curious. We don't want to get into the paper market manipulation and whatnot conversation, but I think there needs to be an understanding here that if you don't stimulate demand destruction soon enough and you artificially keep markets down so that people keep consuming, it's going to take that much longer for you to instigate demand destruction when you hit that red button of like, this is completely out of control. And governments need to be careful here. This exact policy is what has got them into the mess that they're in as we speak. The US government tried their absolute hardest, and they succeeded in bringing the price of oil down from $70 a barrel in March of last year to $58 a barrel, during the latter part of 2025. What's the gain? 25 cents a gallon? Like if that was the end gain. And in the meantime, now you ended up in a situation where it's up over $1 in less than a month. So what could the US government have done? Oh, OPEC is adding barrels. Amazing. We're going to buy 1 million barrels a day to go into the SPR of the US. Okay. In 6 months, you could have stockpiled 200 million barrels per day, or sorry, 200 million barrels into the SPR. You could have pushed pricing from 58 to 68, where you don't have that much demand growth as we had at 58. You could have had US keep rigs on. Let's not forget, the US rig count is down 25% in the Permian since April of last year, since this whole tariff nonsense started. The US frac count is down 25% since April of last year. So in order to normalize now, you have to gain that back before you're adding incremental rigs. So you can see how like this energy policy of you tried to pick up that nickel in front of the bulldozer and you got absolutely slammed. You know, these sayings don't come from nowhere. They come because people have lived and they've learned the disaster results of skewed risk reward decisions. The US did it for zero gain, incrementally zero gain. You know, I can't tell you one person that cares whether oil is, whether gasoline national average is 3.1 versus 2.85, but I can give you 300 million people that care that the average is 4.1 and not 3.1. So this is really the world has to learn the hard way, and it's learning that hard way as we speak. And I think this is good. This is good for the globe going forward because people needed to be brought back to proper energy education and proper energy policy. Oil disappears. We consume 105 million barrels per day. Is gone. It's not like gold and silver where you can recycle. It's not like steel and copper where you can recycle things. It still exists. There's 105 million barrels per day. You know, everybody watching should picture it. You know what a barrel looks like. 42 gallons. You've seen barrels of water. You've seen barrels of oil. 105 million barrels of those gone disappear into thin air every day. There's no way around this. We need better energy education. When I started White Tundra Investments, I was doing my YouTubes on Saturdays, Sundays. A large part of that was because of this, because people have zero clue what's going on in oil, like oil in general, let alone oil markets. So, you know, we think this is a great place right now for people to learn, spend time understanding, and politicians to recalibrate and sort of understand the skewed risk reward on energy policy.
From an investing standpoint, Shubham, which areas would an energy investor be looking at right now? Would they be looking at oil producers? Would they be looking at oil service companies, natural gas producers? Where do you see the hottest sectors within the energy field at this moment?
Yeah, so I think there's obviously been a bit of a dislocation. People are, you know, generally saying, oh, well, the price of oil went up, but the stocks didn't go up. Okay, let's go back a little bit. Over the entirety of 2025, especially second half, we saw oil focused producers rise way more than the price of WTI rose. So you were already seeing multiples start to rise, understanding that there's geopolitical risk here, knowing that the world isn't investing in supply at these prices, knowing that the world's demand continues to rise at these prices. So we already had a bit of a early stage bump, if you will, and we have seen oil producers continue to rise as the strip has gone up, as the back end of the strip has gone up, 2026, late 27, 28. We do continue to see that rise. Could a producers that can drill a bunch of shale wells right now, very small, and sort of grow rapidly, make a bunch of money, have that reflected in the equity price? Yes, possibly. But I really think where we're coming back to is your long life conventional oil producer. So, you know, whether that's in the US, whether that's Gulf of America, in the offshore area, whether that's the Guyanese oil, you know, we can talk about the North Sea producers, especially on the Norwegian side, Canadian oil sands, the Canadian conventional producers that are into secondary, tertiary recoveries. If this conflict drags on here, for even another 30 to 60 days, which is sort of that mark that we've been talking about, you're going to see extended higher prices here for quite a significant period, barring any sort of paper manipulation going into midterms and dumping of paper contracts and all that. Physical market should stay consistently strong, and it's these kind of companies that we feel very, very confident in this type of environment. You will see rises in the prices of service rigs, steel, pumps, casings, equipments. So the U.S. shale producer, yes, can add barrels. Most of them are already very huge at this point due to the consolidation that's occurred. So some marginal gain, I'll say, in terms of the growth they can do. But a producer like the Canadian oil sands that's expanding from here can add 25% extra barrels in 12 months. That is where my mind is going to right now, depending on how long this conflict drags on and depending on how low the inventory levels of the world gets. So, people have their own strategies. I have always been a believer in long life, good quality rock that has very low decline rates and then can be developed in a higher oil price environment. That is exactly the producer that we invested in 2021, 2022, 2023. These kinds of companies don't do that well at $60 oil. They do decent at $70 oil, but they really shine at this $80, $90, $100 oil. You don't need $120 for this to work. You need $80 oil for these kinds of companies to really work. So people that follow me for a little bit are well aware of the companies that I'm involved with and that I used to invest in / I'm still invested in. We are by and large a big believer in this. I also believe from a more financial perspective that as we get to the structural bull cycle where OPEC is more tapped out, where US shale is not expanding even at higher prices, where demand sort of continues to rise despite higher pricing. When you're really in the crux of the oil bull cycle, you will see a material gap start to come between the high decline shale players and the low decline oil sands, offshore, water flood, polymer flood type of companies. We have never been in a bull cycle with shale companies as part of that. But you look at the two different businesses, they are completely different businesses. I can run a oil sands company with almost zero capital spent. Yeah, there's some drilling on new pads and turnarounds and whatnot, but almost relatively zero capital spent and keep production very, very flat. That gives you a much different NPV profile than a company that's declining 40% a year in US shale if you spent no capital. The NPV on that is completely different. How is the market going to value these two different companies in terms of cash flow multiples when the cash flow today of one and the other is the same, but the cash flow in 3 years of one with no capital is maybe 30%, and whereas the low decline company is at 80%. So that's something I really would ask investors to model out. Don't go off of today's cash flows. Model it out for 5 years of that cash flow and the capital commitments required to keep that cash flow flat. In today's strip pricing.
Will these higher energy prices impact the data center AI story that's heavily energy intensive? And if so, to what degree?
I don't really think so, Danny. Like there's been a lot of fuss about data centers and the electricity usage and the land and the water. At the end of the day, yes, there's incremental growth there, 100%. Right? We're not going to argue that fact. But I think data centers will pay the excess for natural gas that they need to. They may pay for the distribution that they need to. I think they are hell bent on creating these data centers and AI modules and whatnot. Anyways, the world seems to be more and more going towards that. I think it's very hard to sit here and argue that AI is a real thing. It's getting better and better by the week. We use it extensively here, both at White Tundra and at Prospera. this is going to be a step change in productivity and efficiency. And the people that are funding this are just willing to spend capex regardless of sort of energy pricing. They are anyway chasing sort of stranded gas and cheap electricity and cheap cooling where they can, compared to putting them in the cities or somewhere else. So I can't see this being a big deterrent to that. You might see some decentralization, so more data centers, but less size on each, possibly. We saw some of the Amazon stuff get attacked in the Middle East. Maybe there's a bit more redundancy that gets created over there on this sort of thing. I think, to really answer the question properly, is the world right now is willing to consume every molecule of energy that you throw at it. And that's it. Like that is just the basic fact of where the world is headed. We are consuming every AI prompt that's available. We're consuming every barrel of oil that's possible. We're consuming every molecule of energy, no matter what, that's possible. And the more energy we feed into the system, the more that people are willing to consume. This is a fact. Like, the more fuel efficient we made vehicles, people bought massive Yukons and trucks that are 3 times the size of what a truck used to be, 20, 30 years ago. And just bigger everything. So I think in general, you cannot stop this. No matter what the world says, you cannot stop this. If every wind molecule and solar energy molecule is just adding to the energy that the world continues to use on a day-to-day basis, and that usage continues to grow. So will people have to adapt a little bit? Will growth get stunted in certain situations in parts of the world where the price is rising exponentially? Yes. But that molecule will just get consumed somewhere else. So I think this is simply a matter of there is more energy demand in the world than we can provide today. And that's just the base fact of where civilization has got to today, which makes it all the more important to have excess inventory, excess insurance policies, an extra couple of spare cans of gasoline in your garage, et cetera, because life stops pretty fast without access to energy. And it stops, bam. I would not pay 50 cents. I would not have somebody pay me 50 cents in exchange for me having to walk 40 miles and go and deliver something. Like that's the nature of energy. It is so cheap right now that people will just keep consuming it regardless of a 40, 50% increase, because we're addicted to it and we need it.
Shubham, we briefly mentioned the food aspect of things. And of course, fertilizers are derivatives of natural gas, and natural gas is part of this entire calculus now. Do you anticipate food shortages as well? And if so, is this globally or in certain parts of the world?
Yeah, I'm not tracking the food as closely, but the food, I think it's the FAO index of pricing, generally follows oil prices as we go. So we will expect to see higher pricing on food sort of globally. You will also actually see a huge pricing increase in plastics. So the food is transported in these plastics and then sold in plastics and polyethylenes and stuff. You will see a huge pricing increase on those kinds of products because we've lost some condensate supply. We've lost the propane supply that was going around. You have already seen plants shut down in Asia that were consuming butanes and propanes and ethanes, making different kinds of plastics. So there will be a long-lasting impact of this, even if it gets solved here as we speak today. There will need to be a recovery phase coming out of this, for an extended period of time. Food shortages, don't really want to get into the panic mode here. I think so far it seems to be okay. The Gulf countries probably the most exposed, given that they import a lot of their food needs. North America should be generally insulated. Yes, pricing will go higher, right? there's a difference between a shortage and a pricing going higher. You're going to see in general pricing rise. Inflation's going to be rising here. More or less regardless, I think, of what happens. Higher interest rates not going to solve that problem. You have a physical undersupply of a real much needed product. That's it. Higher inflation rates doesn't, or sorry, higher interest rates, Fed funds rates, etc. That doesn't solve that basic problem. People have been talking about stagflation for quite a while, and I think we're well into it now with this decision that was made to go in and attack Iran and the regime. So be mindful. Everybody in the world should keep tracking the news, keep following things very closely. Again, cannot repeat it enough. We are in unprecedented times. I don't want to say you got to go in your bunker and collect 50 years worth of food, but be careful. Be understanding of the situation that's currently there. It would take one Houthi rocket to blow up the Yanbu port, and there's 4 million more barrels per day offline out of Saudi Arabia. So
from the Red Sea, right?
Sorry, yeah, on the Red Sea.
Okay,
that's correct. Yeah, I think I'm an optimist by nature. I am very, very positive about where the world goes, and sort of about personal initiatives. But what I can say is, having operated wells in remote areas in the bush and then sort of being out there by myself, I've got generally an understanding of you should not just take everything for granted, as people have been lulled into over the last 10 years. This era of abundance, this era of electricity is always there, when you need it. I'm not saying it's going to go away tomorrow, but I think people should come back a bit to their, if I will, the hunter-gatherer mindset, where you need to be on the lookout for dangers that can come in. Because I'll be honest, I don't think the global powers that be have a control of the situation as they've been claiming to for the last many years. It's actually been the private markets that have shoved billions of dollars into U.S. shale, that have given cheap energy to the world. Totally fine. That's just how the world is. I think people need to take care of themselves a little bit more here. Regardless, that's just a good policy to hold, anyways. Regardless of things going on in the world, right? You keep extra food in your fridge. You keep extra barbecue pellets. You keep extra beers in the fridge going into the football Sunday. Like, it's human nature. So why do you rely on just gas being there at all times? Yes, generally being the case. But I think people need to be just more aware of where things are, and energy education, energy policy. I cannot stress it enough. We have been talking about this for years, about just this lull of people wanting to beat up the oil producer because we're making money and we're capitalists, pigs, and this and that. And you can say whatever you want, but world stops pretty fast when you don't have oil. So you generally want to buy those kinds of products where it would absolutely kill your lifestyle or your happiness if you didn't have access to it for a day or two.
So you mentioned the Houthis activating on the Red Sea potentially. It hasn't happened yet, but if it were to happen, I believe you mentioned 4 million, an additional 4 million barrels would be taken offline. What are the implications of that?
Yeah, unprecedented times power of 10. So I think obviously the obvious physical impact of losing another 4 million barrels per day is sort of catastrophic in general. But beyond that, to have the Houthi rebels activated, who have in the past blocked Red Sea very successfully, activated and caused disruption and damage here, it would be absolutely catastrophic for the world. I think people fail to realize that you can make a deal with whoever you want. You can make a deal with the leader of Iran or whoever this puppet or proxy that you put in. That doesn't stop a guy wearing sandals sitting in a mountain somewhere to launch an RPG and blow up a ship. That's all it takes. So I think the reality of this is control has already been lost. When you kill the leader, you lose control, and unless you have a plan, there is no plan. So, to have multiple factions that are already involved. Reminder: this is not just the IRGC. This is not just the Hezbollah. There's numerous militias in Iraq and Lebanon and all over the place that have already been activated, throwing bombs, missiles, drones all over the place. To have an additional, relatively meaningful rebel group activated is just not going to be good for the world. Like we don't want to end up in a situation. This is me speaking here again, having lived in San Diego. I've seen the might of the U.S. military, of the U.S. Navy, of the U.S. Air Force. So far they haven't gone in. Why? Because they're scared. They're scared of a ship getting blown up by a mine, and then it becomes a laughing matter as to what happens. But the world really doesn't want to end up in a situation where the U.S. has to throw their full force and sort of military might into the situation, because we're getting there. We are every single day getting closer to that situation, and if the Houthi rebels come in, block the Red Sea, blow up Yanbu port, attack ships, we're gonna get even closer to that D-Day where those aircraft carriers are going in, and they're going in willing to lose troops, willing to lose Marines, willing to lose ships, and it just becomes an all-out chaos situation. It's sort of a difficult time because on one hand, you want to be careful because the risk-reward situation here is completely out of whack. At the other end, you don't want to be alarmist because there could be a solution potentially. Even if it doesn't fix the oil undersupply situation right now, a solution could present itself. But as of right now, my read on the situation is it's gone completely out of control here. The what's happened here is already out of control, and it would not take much more of jawboning and sort of trying to grab people by the neck, and all of a sudden it's all out chaos, everywhere. So yeah, I think tracking very closely. I think people already don't understand the fact that there's 11 million barrels per day offline. So the extra 4, hard to grasp because it doesn't really mean anything. What people need to grasp is we have 11 million barrels per day offline today. When COVID happened and the entire world shut down, we lost about 22 million barrels per day of oil demand for a very short period of time. So to have 11 million barrels per day offline for already, it's been 25 days now, 26 days. And for that to rapidly escalate from here, this would be a crisis like a crisis we have never seen before to a power of 10. At the end of the day, it already is, let alone more oil supply coming offline. We do not have the ability to add millions of barrels per day of supply for too much longer here.
Wow. Well, Shubham, this has been one of the most powerful interviews I've done in a long time. But I think that's all the questions that I have. Is there anything that you'd like to bring up that we didn't talk about before the show wraps up?
Not really. This has been great interview, Danny. I appreciate all the hard hitting questions, and I think I've got my points across. I think we are here in a new era of the structural bull market. It was already going to happen regardless, of any sort of geopolitics issue. The world generally descends into more and more chaos as the price of oil rises because there's more control. It means a lot more to have control of these oil fields at that point. It's so lucrative to do so. Beyond that, track U.S. rigs, track global inventories. It's coming out on a weekly basis. I'm very active on Twitter at the rate White Tundra SG, where I post supply, demand, inventory data as well. And then maybe throw a little shout out to back in 2023 January, I did almost a 7-hour session on global oil and gas macro outlook. It's available on YouTube for people that are new to oil. You're looking to get straight facts. Now it is 3 years out of date, yes, but the base facts of why energy education matters are in that 7-hour video. Sit down, grab a couple beers, grab a pizza, and you listen into that, and can get you up to speed here on all the things that matter from a supply, demand, inventory, S curve, population growth, etc. standpoint. I think, as far as oil, yes, I'm an oil bull. I am an oil investor. I am an oil producer. But I also truly, from my heart, believe in energy education. The world needs to do a better job at informing civilians and citizens about why energy is important, where it comes from, what does it mean, and why we need slightly higher pricing to incentivize producers to keep investing into new supply, which the world needs, not today, but 2, 3, 4, 5 years down the road. And I guess you could argue we need it today, now. So, appreciate your time, and thanks to everybody listening.
Very well said, my friend. Where can people find you if they want to see more of your work?
So we're at Twitter at the rate White Tundra SG. I also have whitetundra.ca, which is my website, shows the portfolio companies that we hold and a bit of some of the archives of the podcasts and interviews that we've done in the past. All my content from 2023 and before, when I was very active, is on YouTube. There's about 100 plus hours of content at the rate White Tundra SG, again, White Tundra Investments. And then, as mentioned, I'm chairman of the board, CEO at Prospera Energy, which is a heavy oil producer in Saskatchewan, in Canada as well, with a strong growth profile. So, I not just invest in this bold thesis. We physically run the company that is set up to take advantage of this. So that's the best place to find me. I'm on email at sgarg@whitetundra.ca. Find it a lot of fun to interact with investors and other kinds of people that are wanting to learn more about oil. I answer every email, and I've done so for the last 5 years. I can say that as a fact. So definitely can talk oil 24/7. And I am also in Calgary downtown now, full time. So anybody that's listening in, that's in Calgary here, I host events here. I host meetups. I host networking sessions. I present a lot talking about oil and gas supply demand. So happy to chat as well in person.
Excellent. Well, we'll have the links to all of your socials and websites down below, so be sure to check them all out, guys. And Shubham, thank you so much for your time. I really appreciate it. I'm sure the audience does as well. And if you guys want to show your appreciation, hit that like and subscribe. Also, hit the hype button as well. If you're watching on your phone, it pops up right underneath the like button once you like the video. Comment, go Shubham, go in the comment section. Let's juice it up in the algorithm. Because as Shubham says, I mean, energy education is key. Let's try to get this video's reach as far and wide as possible. We can do that by liking, subscribing, commenting, all that jazz. So thank you so much for your time, guys. Also, check us out on Substack at capitalcosm.substack.com to get access to all of my videos early, ad-free, and uncensored for the videos that warranted. And so with all that said, I will catch you all next time. Thanks for watching.